Hello friends, today we are going to discuss about International Accounting Standard 1, presentation of financial statements. Financial statements consist of statement of financial position, statement of profit or loss and other comprehensive income, statement of changes in equity, statement of cash flows, notes to financial statement, other narrative information. Earlier statement of financial position used to call balance sheet, which presents financial position of an entity at any given date. Earlier statement of profit or loss and other comprehensive income used to be income statement, that is profit and loss account. Statement of changes in equity, whatever the changes reflected in equity share capital, retained earnings, reserves and surplus, cash flow hedge reserve has to be disclosed under International Accounting Standard 1. Statement of cash flows. As we know, the cash balances, opening cash balances and closing cash balance, reconciliation has to be prepared under operating, under the heads operating cash flows, investment cash flows, financial cash flows. Next, we are going to discuss in detail about statement of financial position. Statement of financial position. Here you observe I've clearly mentioned 2016 and 2015. We have to present the financial position comparative to the earlier period. Statement of financial position is further divided into three components: assets, liabilities, equity. Assets are further divided into non-current assets and current assets. Non-current assets are assets which deliver benefits over long term. Current assets are assets where benefits are realized within 1 year from balance sheet. Under non-current assets, property, plant and equipment, goodwill, other intangible assets, investment in associates, available for sale investments. Some of the examples of non-current assets are land, building, machinery, equipment, furniture and fixtures, goodwill, internally generated, brands, patents, license, and investment in associates where we have voting power more than 20% and less than 50%. And coming under current assets, inventories, trade receivables, other current assets, cash and cash equivalent. Examples of current assets are closing stock, sundry debtors, other short-term provisions, and bank account and cash account. Under equity, we have share capital, retained earnings, other components of equity, non-controlling interest. Liabilities are further divided into non-current liabilities and current liabilities. Liabilities means entity owes to someone. Non-current liabilities means which has to be settled over long-term period. Current liabilities means which has to be settled within 1 year. Under non-current liabilities, long-term borrowings, deferred tax, long-term provisions. Under current liabilities, trade and other payables, short-term borrowings, current portion of long-term borrowings, short-term provisions. Statement of comprehensive income. There are two parts in statement of comprehensive income. First part presents statement of income. Second part presents statement of other comprehensive income. Statement of comprehensive income presents certain items of unrealized gain or loss to be directly accounted for in the equity, which we'll be discussing in further slides. Actually, income statement is also known as profit and loss account, and in income statement we have revenue, cost of sales, distribution cost, admin cost, and finance cost, later on tax, and we'll get the results of the entity, that is profit or loss. This profit or loss is further attributable to the owners and non-controlling interest. Basic EPS and diluted EPS also has to be shown in the income statement as per International Accounting Standard 1, which we are going to discuss in the next slide. There are two distinct presentation styles of statement of income. Income statement portion can be either presented by nature of expense or nature of function. Let us see how we can classify the expense by nature. Revenue, other income, changes in inventories of finished goods and work in progress, work performed by the entity and capitalized, raw material consumed, employee benefit expense, depreciation and amortization expense, impairment of property, plant and equipment, and intangible assets. Other expenses, finance cost, share of profit of associates. Profit before tax, income tax expense, profit for the year from continuing operation, profit or loss for the year from discontinued operation, profit for the year, profit attributable to owners of the entity, non-controlling interest, earnings per share, basic EPS and diluted EPS. If we are going to present income statement by nature, we need to follow this structure. All the items has to be presented in the format as discussed now. The next format is expenses by function. Revenue, cost of sales, gross profit, other income, distribution cost, administrative expense, other expense, finance cost, share of profit of associates. Profit before tax, income tax expense, profit for the year from continuing operation, profit or loss for the year from discontinued operation, profit for the year, profit attributable to owners of entity, non-controlling interest, total comprehensive income attributable to owners of entity, non-controlling interest, earnings per share, basic EPS, diluted EPS. Here, once we arrive at the profit for the year, this profit has to be attributable to the owners of the entity. Everywhere total profit or total comprehensive income has to be attributable to the owners of the entity, and we should also present the basic EPS and diluted EPS. EPS means earnings per share. Statement of other comprehensive income. If we observe statement of profit or loss and other comprehensive income, what is the difference between profit and loss and other comprehensive income? In other comprehensive income, we are going to show only few items, that is wherever the exchange differences in translating foreign operation. Suppose, for example, UK entity has business in India and Indian currency is INR and UK currency is pound. Functional currency of UK entity is pound. So we have to translate the financial statements of Indian entity to UK. While translating, there would be some exchange difference. This exchange difference has to be accounted under other comprehensive income. In the similar way, gain or loss on fair value changes in available for sale financial instruments. Similar way, gain on revaluation of property, plant and equipment. All these items has to be under other comprehensive income. As discussed earlier, all total comprehensive income has to be attributable to owners of entity, non-controlling interest, and earnings per share, basic and diluted EPS also has to be presented. Some of the information to be presented on face of income statement. Suppose there is a decrease in property, plant and equipment compared to market value. Suppose the carrying value is higher than the recoverable value. In that case, impairment has to be charged in P&L account, and impairment can also be reversed. In the similar way, we can write down inventory and write down property, plant and equipment, and also we can reverse that. And all those disposal of property, plant and equipment, investments, all this has to be recorded on the income statement portion. Litigation settlement, discontinuous operation, other reversal of provisions, all these items are the material items, so it has to be presented on the face of income statement. Statement of changes in equity. Equity consists of share capital, retained earnings, reserves and surplus, cash flow hedge reserves. Let us take the opening balances of all share capital, retained earnings, reserves and surplus, cash flow hedges. We have to reinstate this retained earnings with the prior period item expenditure items accounted, and also we need to reconcile the opening balances to the closing balances. Suppose if there is new issue of share capital, and if there is any dividend paid out and profit for the year, all these changes has to be recorded separately and presented in changes in equity. Distribution to owners by way of dividend and other transactions with owners like issue of shares has to be presented in the statement of changes in equity. IAS 1 particularly requires disclosure of dividend recognized and distributed either in statement of changes in equity or in notes along with per share information. Thanks for watching International Accounting Standard 1.